Today is Tuesday, October the 1st. It's the beginning of the fourth quarter. The market closed 10 seconds ago, so let's jump right into it because something very important happened today. Volume, as we have seen, maybe slightly lower, but still typical trading volume. The Dow, NASDAQ, and the S&P opened up, and then at 10 a.m., bang, it started to drop. And it started to drop because the manufacturing index came out and it showed the worst decline in the manufacturing sector in 10 years. This is probably not going to go away. So the enthusiasm about any talks about what's going on in China, clearly the manufacturing segment doesn't believe it, has already been hurt and doesn't see any good news on the horizon, and so manufacturing has pulled back. That means they're buying less capital goods. That means they're hiring fewer people. That means they're digging in for a long slog till the next election, unless impeachment happens. I don't think this market is reacting to impeachment at all. It's simply reacting to economic news. The decliners way outpassed the advancers by 3-1, which is going to take our breadth indicator back down towards the oversold line. And I'm saying that it's going to hit the oversold line. And this famous gap in the S&P that we've been looking at for we've been looking at since September the 5th, so less than a month, but it's closed. We said it would close, bingo, on the nose, it closed. What's going to be bad news is we'll create an alert here, if price falls below that gap tomorrow. So the gap is closed. If we fall lower at the open, then we'll create another gap that will become resistance on the move up. Apple started off like I was going to say something. Started off like crazy, was up about $5, and then started to pull back with everything in the market. Apple's pullback really held off compared to other stocks. If you look at Apple was still moving up at 11:30, whereas the market decided that it was going to start tanking at 10 o'clock. So Apple kept going for another hour and a half, and then just pessimism overtook them. Caterpillar had a terrible day, down 3%, but that's nothing compared to the banks. Take a look at what happened to the banks. We don't follow any banks, but I'll show you some bank stocks right now. And here's what happened to Bank of America today. Look at that candle, down to the 200 SMA and into the cloud. Fifth Third, let's just put that up for everybody. Fifth Third went through the cloud, traversed all the way through the cloud. JP Morgan, big drop. Citigroup, big drop. US Bank, look at all that. That was down 2.8%. Fifth Third was down 3.3%. And the whole XLF came down and stopped just a bit above the cloud. US Bank got saved by the Chiku span on the cloud, but we don't see the same happening for some of the other stocks. We see the Chiku span and the 50 simple moving average for Citigroup and the XLF. But now let's go back to our stocks. Caterpillar, we said, brutal day. Look at the size of that candle. That's an engulfing candle that engulfs 1, 2, 3, 4 days. That's what you call an NR4. And we look at NR3s, I think, and NR7s as being significant. So we've just had a bigger move that encompasses 4 days, almost 5 days. And if we go back before this one, we could say this one here, almost 6 days. Let's see what happens tomorrow. It's NR4. Gold started up, GDX actually started up with a nice pop, but the dollar didn't weaken today. The dollar actually got stronger, and that hurt gold. So when markets started to sell off and money moved to the dollar, and of course Trump is complaining about the high interest rates, which are keeping the dollar too high, which he says is hurting American manufacturing. Guess what? The dollar hasn't impacted manufacturing as much as the tariffs have. But this trend line is what we're looking at for gold. Hopefully we can be rescued by the cloud, and we can see some resuming action in GDX and the miners. WDC pulled back, and WHR, I've got to get WHR back onto my watch list here. WHR had another engulfing kind of day and only engulfed one candle, but that's a bearish sign. When you have a higher high and a lower low than the previous day, we could see Whirlpool really get impacted, although it was low volume, impacted by any movement down in the market. It could be one of the ones to suffer, and that'll give us an opportunity, frankly, to buy back. AT&T declared a dividend today. Ex-dividend is October the 10th. It's 51 cents. We had an engulfing day here as well, but only in our one engulfing day. I'm still holding 500 shares, but I did sell the 37.50 calls this morning. So if it gets over 37.50, I'll break even. If it stays below 37.50, I'll have added 25 cents to my, I'll have removed 25 cents from my cost. I'm going to give up looking at Snap now. I think this stock is dead. So I am going to remove it, and I'll remove it later. So that's it today. So the S&P is heading downwards. I've lost my arrows. Remember the arrows that I've been drawing? I upgraded my motive wave and lost all of my arrows. Interesting. I'm going to have to tell them that. So we'll start the arrows and the predictions again tomorrow. Thank you very much.